Okay, there it is. Welcome to the midweek update for the 19th of April. This is an options expiration week for the month. I'll remind you guys again. And it's been a very interesting month. Pretty good surge with some dovish comments from the Fed and some bearish looking economic numbers. And then we've just stopped. We've just stalled out going into earnings season. Let's talk about it, guys, and let's share your trades as well. Take responsibility for the outcome. You guys get the whole deal. Let's jump into it. So I called this, the Fed is out of the way. And for months and months and months, we've had this discussion with the traders here at Maverick and some of the staff, and boy, even some of my family, of is the Fed too aggressive? Are they getting ahead of themselves? Are we going to hit a recession? What recession? Oh, I can feel it already. How is inflation going to handle so on and so forth? The market seemed to think one way, the Fed thought the other, but we seem to be on the same page. So it's set in the back burner. And I wanted to say out of the way, meaning it's just set to the back burner. We've got a 50-50 chance that they're going to raise 0.25 basis points in May. If we get a jobless claims down at the bottom, folks, that's all we got this week as far as economic data that's really meaning anything. And it starts to increase, then we might not see a raise at all. So we're left to figure things out on our own, and the market is. They're kind of just sitting here. So it's stalled out a little bit, but it's still bullish technically. And we have to kind of pay attention to it. We got some news coming out. We've got good earnings. We've got bad earnings. We've got stocks going up, stocks going down. And I imagine that's going to play itself out for the next week or so. But it so happens to be in an options expiration cycle. So let's jump into some of the trades that we've been looking at. Because what's really interesting, folks, is they've worked out. They are. I mean, our bulls are staying bullish. Our bears are staying bearish. A little bit of hiccup there, here and there. I've got a couple that we talked about last week and the week before that I brought into last week's beginning of the class, and just to let you know where they're at. So things are moving pretty good. Pretty good. It's just the overall markets aren't showing this retraction that I'm seeing in some of the sectors, and we'll get there when we get to the strongest and weakest for the week. So the trade ideas that we had from last week and the week before have carried over. Apple was last week. Take Two Interactive was 2 weeks ago. WPM was last week. They still look good. I'll break them down. On the neutral side, I'm not seeing much that I want to stay neutral in, and here's why, guys. It's going to announce. I think we had AMAT last week for it, and it's already moving to the downside. It has its earnings on the 27th, I think. It's coming up here soon. So I'm not going to put anything on the neutral side just because it's going to gap up or down based on probably its earnings. I try to stay away from my butterflies during earnings season. On the bear side, we did have one at the bottom there. Netflix did announce, and it gapped down, but it still looks super bearish if we just let today play out. So we'll see if that we can add a little bit, kind of kick a dog while it's down, something sideways to down. SQ and ADT, both from this class. Let's get started with the bulls first. This is Wheaton. We're talking about the precious metals here, and this is pretty cool because it absolutely triggered when we were talking about it. I believe this is the 12th. I'm going to have to count days. 1, 2, 3, and then 1, 2, 3. Yeah, so here's the 12th. This is where we're discussing it on this nice breakout, and it absolutely confirmed the next day. Now, for anybody that jumped into it with a 52, 54, or 50, 52 diagonal spread, I still think you're in a sweet spot. It has come down pretty aggressively, but so has precious metal itself. Remember, we saw a big surge in gold and a pullback in the dollar with a little bit of overextension in it and some worries about weakness and yada yada, right? But look where it is technically. I love the fact that it's pulled back to a previous support. So whether or not you're in this already from the previous week or and you're worried about it, well, I'm here to say it's still technically in a good spot as long as you don't have anything that expires this week, right? 52. But it could move higher for those of you who want to jump into it and take advantage of what it did back here. Right, here's that first pullback. It looks like it's doing another one right at this area. So even if it just shoots up and stalls out around 50, sideways to up would be pretty good. So I still like it on the bull side. Apple is one that, excuse me, folks, if I can get the slide to move forward. There she is. If Apple was absolutely wonderful, we're talking about it here as, hey, we got to wait for this to confirm to the upside, and guess what it did? Bam, absolutely confirmed to the upside. Pretty much eat it the whole move to the revisit of the resistance, which would be the bull pullback, but it's starting to leak higher, and I do like it. I like the sector it's in. I like the way it's been accepted. I like the way it's moving. So If you got into it last week, awesome. If you want to get into it now, fine. Check earnings. Gosh, I should say that. Check earnings because I have a bad habit of never checking. Check to see where it's at. But sideways to up from here, if you missed the pullback, you can catch the breakout. And this is exactly what it's doing. So, looks decent. Take two interactive. It's very similar. This is on this nice slope that we've talked about. Here it was, 1, 2, 3, 1, 2, 3. This is where we talked about, hey, a possible breakout above its resistance, and it absolutely did. So it's just continuing to do this, and it's getting tighter, right, as it approaches this. I didn't zoom all the way out on this slide because I wanted to make sure you guys were aware of this 125 resistance area, but sideways to up, targeted butterfly with a slight bull bias, a 120, 125, 130 butterfly spread, maybe week 4 of April expiration. I wouldn't want to do anything this week unless you want to sell the 125 and buy the 120 May. Play it as a diagonal. A little bit aggressive, but it looks really nice to the upside. So, great work, class. That's on the bull. Let's take a look at your bears. This is square. Also came up on the bear watch list and was one of our bearish trades. Here's 1, 2, 3, 1, 2, 3. We were taking a look at this nice move to the downside. I love this confirmation. I still have a target on this at this area. Looked like it was going to try to hesitate these few days, but today looks promising. Sure, it's off of its low and it's actually pushing higher. Let me erase my crayon there. You can see this is a dragonfly doji, right? So it's usually a pivot point to the upside, but it's got a pretty good line here at 65. So even if it tries to meander around for a little bit, I'm pretty comfortable staying bearish on it. The reason being is because when this bears out, it bears out hard, doesn't it? I mean, look at all these. So, and here's a gap down, and it takes time to retrace. And so I think getting to this 60 here, maybe it might not do it over the next few days. Who knows? We know that we've had some pretty bearish Fridays when it comes to options expiration cycles. That might follow suit here, but I'm pretty comfortable holding this a little longer. Take a look at ADT. This one just seems to folly and slide. It did have a little bit of a bounce last time. We talked about it last week, right about here. I was hoping it was going to break on this red day, and it decided to have one more little meandering pullback, beautifully touching this flattening and falling 20-day moving average. Look at that. It looks like it wants to roll back down. Still looks good. Still like it on the bear side. Still is promising. Netflix, I had it on the bear, and I wanted to show it even after earnings. I don't like it today. I don't. And the reason being volatility is super high. It's going to cost us too much to buy the puts. We're not going to get the right transaction. It's just going to be kind of a mess. I love the fact that it did this, and then it did another one here. And we know what happened when it did it the last time. But this time we have a beautiful crossover. It is now below both of those moving averages, excuse me. We got the volume behind it because of its earnings. Now this actually beat numbers, but projected a little bit of a slowdown in all streaming services because they've got competition with, I think, did I just see that Warner Brothers was going to offer streaming service now? But you got Amazon, you got Hulu, you guys can know there's tons of them. So Netflix did get rid of their DVDs. Finally, I didn't even know you could still buy them or order them online. That's going to save them a bunch of money. So I imagine that is probably what kind of boosted their bottom line and what's expected to grow. But it kind of fell out of favor. So it's got me wondering if these are actually falling out of favor, meaning that, yeah, it's Netflix, it's a streaming service. It's a $322 stock. Can you justify it? Sure, over COVID. But now, do we need it with so much competition? I can go on for hours. So I'm thinking that might kind of follow suit because the markets are in a situation where they are left to make these decisions. Do I really want to buy something that's 60 times its earnings per share, or trading over 100 times its earnings, or I'm making those numbers up specifically for Netflix, but there's other quote-unquote discounts out there. So we'll see. I'm going to keep an eye on it. If this continues to bleed lower and the markets do roll over, especially in the communication services that's experienced so much strength, I'm kind of excited to kind of hit some of these down or knock them off of their pedestals as they start to fall. Might be kind of fun to try to follow them down. Okay, so that's where we're at, and they're all looking really good. Great work, folks. Market analysis. So far, pretty much flat. So far, pretty much flat. It's just Monday, Tuesday. Here we are into Wednesday. I think we exhausted a lot of moves to the upside. I did have a little chart that we're going to look at here. I added the VIX because today was a very interesting little pop up. And I'm not sure what it is. I'll peruse through the news, but we'll talk about it here in a second. Diamonds, SPY, and the Qs absolutely flat. Russell, flat as well. Oil took a drop, and gold, flat. Gold and the dollar are actually starting to yin and yang. So I like to see that. When gold goes up, the dollar goes down. The dollar goes up, gold goes down. I'm starting to see a little bit more of a balance there. That's great. Now we're seeing a flight to safety. And I do believe it's because the traders do see a slowdown in the Fed increasing rates. So they know that the dollar's not going to be as strong as it could be. Flight to safety to gold. We're also seeing that, hey, the dollar might fall off of the top dog currency worldwide. Yeah, it's still an argument, but we'll see. So that's kind of where we're sitting at. Let's get over to the SPY. And it's been a difficult market to try to identify and trade these last few days. And this is just this week. Good push into the end of last week, and then we stalled out on Friday. But these last 3 days, super difficult to trade. Although, I just showed you, the trades of sector performance up and down still are doing that. They're still going those directions. So we might just kind of want to set this on the side burner and say, hey, it looks like we're in a consolidating overall market, but individual stocks are moving higher and are slowly moving lower. So if we just take that kind of out of consideration and just kind of park this with a top-down approach, where I'm going to give you here in a second, and just kind of leave it at that, and then just focus more on the individual stocks, I think we're going to be a little bit better off. There's nothing in the tea leaves, and I'm going to just call this the tea leaves, that show us we should panic or be overly excited or anything in between. It's just, hey, go find some trades where you find them. Diamonds are the exact same thing. It's got a little bit of a consolidation, a lot more leggy than the SPY, but it's kind of pushing its head right up against its resistance. It did get that crossover, not as nice as the SPY, but it's technically still bullish. I would like to see this a little higher before I got to maybe a +2 on this. This to me is still kind of a +1.5. But it's on its way up there. You'll see here in a second what's going on with the sectors, because we're not seeing it here in the overall indexes, which is retracements. So here's the Qs. Beautiful breakout, and now it's just sitting in a really tight high base. Last few days have been interesting. Yesterday looked like an absolute breakout, failed. Today looked like we're going to roll back down. Spike in the VIX, I'll show it to you in a second, but it's climbing back up. So push, pull, pull, push. Not doing anything, staying flat. No reason to adjust, react, or change anything in your positions or your outlooks. There really isn't anything there. So this, and I don't show this often, but I thought it really interesting. This is what happens when there's no more fear of the Fed. That's the complacency coming into the market. Every single person that was on the sideline that was worried about, oh, there might be a rate hike. What if the CPI comes in hot? It's gone. It's gone. And when all of those traders are in the markets, what's left? And that's where we're seeing this hesitation. Nobody wants to sell, but there's nobody left to get in the market. Everybody that's in is in. And there it is. So this bump up in the VIX, and folks, I haven't seen the close yet, obviously. And I haven't spent a lot of time perusing the news. I've been just building this course to see if there's some outlier. There's a big move lower in the cryptos. The cryptocurrencies have experienced a pretty good surge as well, but today the cryptos really fell. And this spike went up as well, or at the same time. I don't know if they're correlated. I'm still looking through some of the news. I did see a home sales number, and I think that's in the economics. They did drop. Home prices have come down. So are we in the situation now where bad news is bad news? And if that's true, then guess what, bears? We could get ready to see that corrective spike in the markets. It might not fall apart because we've climbed so high since January, but we might get back up into this area here with our first corrective action. It's going to come hard, it's going to come fast, and then we're going to have to see which support holds. That's a possibility. Once again, guys, I am not exactly sure what caused this spike today. I like to try to find things, something specific, or some sentiment change that really creates stuff like this. Maybe it's an anomaly. I'll just let it go. Okay. Speaking of things that could cause change, there's not much out there this week, economic-wise. So Empire State Manufacturing was big. It had a little bit of an uptick today, or excuse me, this week. It was supposed to be on the downside. Housing starts in line. Crude oil inventories, boy, that used to be such a big deal. A little bit of a drop. We know that the spigot's tightening. We know that the expectations for demand of energy is going to go lower, some of that nature. So not much to go off of so far this week. Now, what do we got left? Like I said, tomorrow, the only thing I'm really probably just going to glance at is the unemployment claims. And we need to see this go north. Maybe we don't anymore. Maybe we don't. Maybe now that we're seeing a little bit of slowing in inflation, that maybe we can just kind of sit at this 200K, which is a very healthy unemployment number. We got to have some unemployment. But past that, as you guys can see, it's just a bunch of Fed talk. Flash manufacturing, PMI, I'm not going to put too much into those. The services PMI, I don't think we're going to get too much of a reaction on these because it's options expiration. So I don't think we're going to get much outside it. And if this number is a little higher or a little low, I think we're going to be okay. But if it's massive, okay, that's it. That could have a little bit of an impact on the markets. Okay, so that's what I've got. Let's go ahead and pull the class. First of all, I got to find where I put my polls. Where'd they go? There they are. Let's start with a weekly outlook. See what you guys are thinking out there. Okay, guys, got about 92% voted. Let's close the poll and share it. Oh, 100%. Thank you guys for hitting the button. Let's close and share it. And we are absolutely flat to a +1. 75% 0. Only 8% on an outlier to the downside. 25% to +1. So we're definitely 0. Let's just call that 0. 0 to slightly more bullish. Excellent. Okay, so let's go ahead and jump straight to the monthly. And I'll launch this. And we'll see what we're looking at a little bit longer term. Another 100% vote. Let's go ahead and close this poll and share it. 50% +1, 25% +2, 17% at -1. We are definitely a little bit more bullish longer term than we were shorter term. So shorter term we're about 0, and this one we're about +1. Thanks, guys. Appreciate it. And I am very, very, very close to that exact thing. I am a 0 for the week, right? That's what you guys were at, and a +2 for the month. And the whole reason I'm a +2 is because we're still up in that upper range, right? Let me get my pin and draw on the chart. We're still up here. It's just this channel, and I could make the argument to a +1 if we came down a little bit. So I like to change my sentiment or my top-down approach when I see a bull pullback. That would drop me lower here. But when I see a high base or a move to the upside, I have to get back up to the +2. Above the 20, the above the 50, the slope, and the crossover are correct. So 1, 2, 3. I am at +2 for the month. Now, on the week, I just think we consolidate. I agree 100%. I think we kind of let some of this stuff roll. We get to the options expiration cycle, watch some of this, these earnings play out, and we'll see what these markets are going to do. Now, overall, let's get to the sector analysis because the markets, the overall indexes themselves are a lot stronger than some of these sectors. We're seeing corrective action. So what do we got here? Financials and energy being the strongest and weakest. So take a look at this. So financials, consumer cyclical, technology are all bouncing. Communication services, utilities, and energy are all pulling back. So it's just corrective action, and this is much easier to see when you take a look at the strongest and the weakest. So here's financials. This doesn't look like something that I want to rush to buy in anytime soon, is it? It just came off that catastrophic correction and worry about the banking industry, which could still be a problem moving forward. Right now, it looks like the markets have set it aside and they just don't care. It's fine. It's actually kind of promising to see that it consolidated around the 20 and it's now shooting up to its 50. But to me, this looks like a pretty oversold bounce right? Or some short squeezing going on. A lot of people probably abandoned their banks, abandoned some of their positions and took some shorts. So this might be squeezing them out. So this looks more of a corrective action than it does true strength. On the other side of that, energy looks like consolidation or corrective action more than pure weakness, right? We had a pretty good surge back up above both moving averages. This is mostly a base across the board, and I wouldn't say, oh, the end of the world's coming. It's just not going as high as some of the other sectors. It's just consolidating, right? See? Interesting, right? So I'm seeing sector, I don't want to say rotation because it's not rotation, sorry, sector corrections. Kind of sector correction going on with the markets that aren't pulling back. They're just basing. So we have to be glass half full, and I love your outlook, folks, and I agree with it because that's technically what we're seeing in these markets. So conclusion-wise, earnings should be in the driver's seat. Obviously it is. Netflix had some reactions. We're going to get into some of those bigger, larger names, and we'll see good go up and bad go down. We'll see. I'd like to see it. Company action, preparing for slowing economy. And this is one thing that I've been seeing a lot of, that the markets aren't reacting too much when it comes to my second bullet point, my first bullet point indent, is bad news now bad news. Disney laying off thousands of employees, planning to do more. Amazon planning to lay off a bunch of people in their advertising industry. There's still large companies planning major cutbacks and firings across the board in things that they don't no longer see relevant or see demand for. Companies are usually looking 6 months to a year ahead, right? They got to prepare for, hey, we saw success in this, let's push there. Stuff didn't really go well here, let's cut back there. The expectations of companies is absolutely for a slowdown in the economy, whether it's a recession or not. They're expecting a slower consumer, which isn't hard to do since we've been consuming like we had a purpose for the last 2 or 3 years, like we were almost at gunpoint. So we'll see. Bump in the VIX today, but still well below the panic level. So I did see the bump up to 19. I might have answered my own question in this class. Could be a rollover from the April expiration into next month's. It could be as simple as that. But it is still below that 20 level, and it is just one day. Sentiment feels like it's waiting for the next shoe to drop. Oh, what's going to happen? Are we going to go bullish? Are we going to go bearish? Is some black swan event going to come out of nowhere? I'll have to agree with what Rob and Darren said over the weekend, last weekend, that it probably not likely. That's probably the only thing that's going to really shake these markets from being boring and kind of churning. Technically, we're still bullish. Top-down approach, I'm still zero on the weekly, maybe even a +1 to +2 for sure on the monthly. Economic data is super light. You're not missing much. Jobless claims on Thursday. Options expiration this week. All right, that's it. That's the report. Let's jump out. Take a look at some trades. I don't think we're going to have much to look at. Just kind of where we're at, right? Where we are in the markets. What's going on. Take a look at the NASDAQ. Chew. It's another one of those days. Remember, Monday we gapped up, traded down. Yesterday we gapped down, traded up. We're gapped down again. We're trading up. They're almost at par. The Dow's not doing so well, but the NASDAQ's already green. Yeah, okay. More of the same. Let's take a look at a trade. A trade. And it's a if. I love it. James is like, if. This is, disclaimer alert here. This is absolutely speculative. Okay, let's get into it. If the market gets weak, looking like a rolling over, but sitting at support. Yeah, okay. And this will be counter trend, and I like it, James. If. That's a good way to start it. However, it's a pretty good support level, isn't it? It's a big one for it. Right? And gosh, that uniform, it looks to me, and it has a little bit of a hiccup here. You could make the argument for a small stair step, couldn't you? Right? Volume's been quiet. But yeah, this 85, 90, I'll call it, let's call it 85, 87, whatever this is here, is pretty solid. You got a 50-day moving average. This would be really difficult to break. If everything rolls over and the markets win as well, sure, it could roll over. Let's see, since we're here, and this is the one thing we're going to identify and talk about. So January 31st, you'd have to Google it outside of, obviously, Finviz doesn't have when they announce. You could take into consideration other Semiconductors, right? What's Intel doing? Intel, I think, was doing a little better. Maybe not. We'll see. Intel had a pretty good surge recently, and it was because they had a big push into AI, talking about an AI chip that they're going to put into their, their CPU is going to have AI capabilities, so on and so forth, and it kind of just ran its own. It kind of played itself out, but it's similar, right? It's at a support level here. I don't know. It's kind of hard to do the counter trend trade for me, honestly, James. But keep an eye on everything. It would have to be something that would change a lot, not just specific to the stock, or maybe its earnings. Obviously, would do it. But in order to get some of these bull trends to roll over, I would feel more comfortable if the markets were to go on that same route. All right, Felix jumped in here with ALB bear rally confirmed. Oh yeah, okay. Basic materials, yeah, looks good. Stretch it out to make it look really clean here. Engulfing candle, thinking about a bear put spread for the fourth week of April, April 28th, 205, 190. Let me see if I can't try to draw that for us. Yeah, a nice little gap down, or I like how it gapped up and closed lower yesterday. So it's got that nice little bear candle right at a resistance level. You're talking on the 205, 190, right down below this support that it's out, and 205 is just a little bit above. I like it. I like the strike prices. Expiration's good. Yeah, it's a week and a half, and that's fine. What's neat about this is, let's say it only gets to here. It's still a good chunk of change there. It's a little bit too expensive for most people to actually go straight put on that, but I'm not mad at that one. I like it. Let's go ahead and put it down as our one trade for the day. That's fine, folks. Okay. So it's where you find it. We don't get trades every single day in this class. Look at that. I think we're going to rally right back up and close flat, and I think we do the opposite tomorrow and the opposite the next day, or just stay flat for the rest of the week. So let's go back to your lists from last Wednesday and the Wednesday before. Go over your weekend lists, end of day post stuff, and just stick with it, man. The trades that you guys have been submitting, there's no real reason to find any trades because there's none out there. So sometimes you just come up bunk, and that's okay. However, before I cut you loose, I will type in the one bear because I do like it. I do like ALB as a bear. Okay, guys. There she is, right there. Nice and clean. Well, thanks for your participation. It's a slow week. It's an after expiration week. Keep an eye on that VIX. Keep an eye on anything that might be outside of norm, or anything that you might see that's kind of reactionary. And we'll see what these markets can do going to expiration. Thanks for joining me. Thanks for your participation. We'll talk to you next time. Bye, guys.